Hello everyone interested in the cryptocurrency space. So what this video is going to be designed to do is to be an introduction to this space. A lot of people are familiar with the words Bitcoin and blockchain. They're buzzwords and we say we know what they are when we hear of them, but really understanding what's going on behind the scenes, what this could mean for the future, and most importantly, how we can potentially make money off of this. That's what I'm looking to identify here in this video and help clarify. So in this video, we're going to be going over an introduction. What is blockchain? How it can change the future in a lot of industries. We'll be going over that. The major players in terms of the cryptocurrency space and altcoins besides Bitcoin, Ethereum, which is one of the other cryptocurrencies, which I am personally most interested in, and we'll go over why that is. And just a disclaimer, I personally own some Ethereum. Impact on the financial industry and how it could potentially be a disruptor. How can I buy or trade? Obviously, we want to know how we can make money, invest, or trade these cryptocurrencies, and we'll go over that. The psychology of the market, what is going on in this digital internet age, and how it is going to potentially progress in the future. And technical analysis examples. Obviously, technical analysis is a major part of trading, and I have certainly found that these cryptocurrencies follow the rules of technical analysis really well, and they make trading really awesome in this high volatility market that we are currently seeing. So let's get right into it. Introduction. So the rise of Bitcoin. This is where it all started. This is the buzzword, and why it's so popular now is because of the success. We started with this just being a cryptocurrency that no one wanted to trust. What do you mean digital money? What does that even mean? And, you know, sounds like a scam. And you hear all the stories where someone bought a pizza for 5 Bitcoin or whatever, how many, and now it was worth, you know, $200,000 or something. Or the person that threw away their Bitcoin in the trash in their hard drive, and then that was worth millions of dollars now. So there's all those stories, and those are headline stories that are attention grabbers, and people are getting interested. They say, okay, if Bitcoin went from essentially worthless to now being worth $1,900 per coin, how can I make money on the next surge here? Clearly, it is legitimate if the price keeps rising, and it's been doing so for over 7 years at this point. So what Bitcoin is, it's an electronic payment system based on mathematical proof. It is a currency independent of any central authority, and it's transferable almost instantly electronically with low transaction fees. So all of those things are the benefits of why people like Bitcoin. It is decentralized, meaning there's no central bank. If you don't like the Fed or the central bank, you love Bitcoin because there's nobody in control here. You know, you have a financial economic crisis and the Fed comes out and prints $11 trillion or whatever it is out of thin air. That you can't do that with Bitcoin. There's a finite amount of Bitcoin that can be created, and it is 21 million. And once that is created, that's it. There's no more Bitcoin being created. So it's a finite source. And the good thing about Bitcoin is you can divide them up. You can have 0.00015 Bitcoin. And, you know, if the price were to go up to $1 million per coin, obviously that's a stretch, but you would be able to divide those coins up and be able to use them on normal, regular transactions. So the decentralized aspect of it, transferable almost instantly. As you know, if you are trying to transfer funds from your bank, you have to wait business days. You have to wait 2 or 3 business days. The weekends don't count. That is archaic if you are comparing it to this blockchain Bitcoin technology, which is instantly transferable 24/7 and a much more efficient way of doing things. Very low transaction fees. If you trade stocks, you know that the stockbrokers have high fees. There's fees to wire your money. There's fees everywhere, and that's because it requires a third party to transfer those fees. And with Bitcoin and blockchain, a third party is not needed, and the transaction fees are very, very low. Other benefits are it's anonymous. There are addresses that aren't linked to your name. So while there's Bitcoin addresses that give the information, they don't give the identity of the person behind them. They're completely transparent, and we'll go over that when we go over the blockchain in a bit. But the Bitcoin information is stored on this public blockchain, and this blockchain is spread out over thousands and thousands of computers. So it's very hard to hack in the sense that it's not just one central source where hackers can get in and manipulate it, because it's spread out over so many computers and so many networks. And so those are the benefits of Bitcoin and why everybody's interested in them. In 2009, it was created, and it, you know, was a tough road to acceptance. And currently, in May 2017, as I'm making this video, we have a $29.5 billion market cap. That's how much Bitcoin is worth. So very clearly, it has gained acceptance, and it has gained some value, a lot of value. and it is not going anywhere. That's the main thing. When it first started out, everybody was wondering if this was just a fad. Is it going to disappear? Is it going to be like Pogs back in the day? But no, clearly it is not. It's here to stay. And because of the success of Bitcoin, we're seeing hundreds and hundreds of other coins pop up and try and see similar success. And then you have everybody trying to follow the money and see the same kind of gains that Bitcoin has seen. So we have now over 700 of these altcoins, and it's important to understand what they do because that is going to dictate where we want to invest or where we want to trade. And right now, the market cap is a good indication of the popularity of these coins in terms of how much money all of these coins are worth individually. But as far as the cryptocurrency space as a whole, in the first 7 years of creation, it took 7 years to reach $10 billion of market cap. And this is for all of the altcoins. It took 1 more year after that to double, and it took 3 more months after that to double. So we're at 40 billion, over 40 billion at this point. There's a huge surge going on right now. Don't expect this kind of action to keep up forever, obviously. Huge gains. We're seeing some of these names like Ethereum go 1,000% in less than a year. These are huge gains to be had. And with huge gains comes huge volatility, and there is potential to lose money, but it is all about managing trades as we always do. And that's what we're going to be looking at in the technical analysis section of this video here at the end. So now we have a much more potential future usage than Bitcoin. Bitcoin is just a specific cryptocurrency on using blockchain, but blockchain has the potential to disrupt hundreds of industries, which we'll look at here in just a minute. But basically what blockchain is, as I just said, it's a spreadsheet of database across thousands of computers. It's continuously updated and it's open to the public. It's not stored in one place and it's not corruptible. So that's what decentralized means. And centralized is the way we do things right now. So if you have your money in Bank of America, it's centralized. The bank controls your money. And if you have your money in Bitcoin on blockchain, it is decentralized. The information is open to the public, not necessarily who you are and how much Bitcoin you have, but in terms of the public ledger. So it's just this large ledger. Every transaction that has ever happened in Bitcoin is kept in this ledger, and it is publicly accessible. So the traditional way of sharing documents with collaboration is to send a Microsoft Word document to another recipient and ask them to make revisions to it. The problem with that scenario is that you need to wait until receiving a return copy before you can see or make other changes because you are locked out of editing it until the other person is done with it. That's how databases work today. Two owners can't be messing with the same record at once. That's how banks maintain money balances and transfers. They briefly lock access to the account while they decrease the money. They wait for the funds to hit. That's why there is this lag time where it takes, hours to send a wire transfer or days to send it if you're doing so online transfers. And with Google Docs, this is a good example of how Google Docs and Google Sheets, and I'm actually doing this presentation on Google Slides, both parties or whoever you give access to, they can use the same document at the same time. So it's much more time efficient, and it's a single version of the document that's visible to everybody. So it's a shared ledger. It is a shared document. So the distributed part comes into play when sharing involves a number of people. So that's an example of how, emailing a Word document back and forth, how long it takes to go from one person to the other, and then the other person's asleep and they have to wait till they wake up the next day and then they send it back. And the difference of having it as a decentralized document that everybody can edit in real time with each other. Again, it's just speed and ease, and it makes the previous way of doing things seem archaic. So blockchain's potential future applications are peer-to-peer payments, decentralized. That's what Bitcoin is doing, but it's way more than that. You remove the middleman of all these industries and you reduce fees. So just some examples off the top of our head, some popular names. We know Uber, we know Airbnb. They are middlemen. They are a website that we have to use to connect people, connect a person to a ride, connect a person to a place to stay. We eliminate the need for the middleman and the fees associated with them. I just tried to book a room on Airbnb and there's a $49 service fee. So those fees get greatly reduced if we are decentralized and using blockchain. We don't need that middleman to facilitate the transaction between two people. So other ways that this has potential future impact is crowd-funded venture capital funds. People can pool their money together for a shared vision. Distributed databases brings full transparency to election voting and polls. This could potentially change the way that we do elections and have polling systems in terms of, electing our officials. supply chain auditing, and we'll go into a specific example here with a company that is just beginning to launch. And transactions are instantaneous. There's no need to verify the transaction. You know exactly where the goods are. You know exactly who has them. There's no waiting or guessing game. You can see where everything is at any point in time. You're protected against hacking because of the decentralization and files being stored across so many computers. The Internet of Things, that's a buzzword you may have heard at this point, but again, it's just the instantaneous transfer of information and the ability to process that information so much faster than is currently able to be done on a centralized network. And also stock trading in the financial industry. Obviously, with the stock trading as a part of my very significant interest, watching what this could do to the stock trading world is very, very interesting, because as of right now, we have to use a broker. And we have to have that broker facilitate transactions for us. They have to find the buyers and the sellers. And because of that, the fees are extremely high. And it's about $7.95 when you start with Fidelity, $7.95 per trade. So if you want to buy and sell, you're instantly paying $15 already. And what this could do is, number one, reduce those fees to very, very insignificant levels. And number two, is they can be instantaneous. The money can be instantly in your account. If you trade stocks right now, you know that there's a 3-day settlement period where after you sell, it takes multiple days for that money to get back into your account. And that would be eliminated with this blockchain model where the records are kept instantaneously and you don't need Fidelity or E-Trade or one of these brokers to facilitate the transaction, to make sure the funds are settled, and to make sure everything all works out. It's done instantaneously. And I've been trading these cryptocurrencies, and the speed that I can be in and out of these things and have the money right back in my account and buy right back in and sell right away, it's just the freedom comparatively, it's uncomparable, and it just doesn't make sense in terms of staying in the way we currently have this system. There is going to be a transition because it's just better. And right now we're seeing companies get more and more comfortable adopting and experimenting with blockchain to use it. And an example of that is with TheChartGuys.com, we had a member, and that member was with us and had some great time, some good interaction with him, and he ended up leaving after being inspired to create his own company. And he's been in the trucking sector as a family business for his whole life. But he is starting TransFX, and it's a business that is going to be essentially a company that allows you to hedge against future prices in shipping. So where there's all these uncertainties with shipping in terms of weather disasters or other unknowns, it allows you to lock in a future contract price. And they already have this in the Baltic Sea with shipping, and they have it they have it with the stock market and the volatility sector. But in terms of the trucking industry, which is vastly huge, before looking into the actual numbers, the trucking industry across this country and the amount of things that are shipped by truck are so much greater than the average Joe knows off the top of their head. It is a huge industry. And so this is going to create a marketplace that allows you to lock in future contracts for pricing. And that is going to be a hedge, so to speak. You're allowed to hedge against risk of the future. So they are going to be implementing this blockchain technology in this new company, TransFX. And after briefly talking with him, he was explaining that it's a chain of custody. You know who has what at all times through the transaction because of the public transparency. And it protects against things. It protects against theft and fraud. It protects against food being tampered with. And it lets you know exactly what is where all along the shipping process. And in terms of Amazon, when you can track shipping and you can look up the shipping number and see where things are, it's basically just a version of that, but much more specific and much more beneficial to everybody involved in the supply chain. So just a direct quote, if I order something from China, I want to make sure I'm getting the exact amount I want. There's no claims. Instantaneous information being transferred to each other. Looking at major names in the cryptocurrency space, this is as of May 13th, 2017. Cap is looking at the market coins times the value. So the total value of Bitcoin was 29 billion, Ethereum 8.1 billion, Ripple 8 billion, Litecoin 1.4, and NEM was 1.1. That's of May 13th. Let's look back here at November 12th, 2016. So this was just 6 months ago. Bitcoin was 11.3 billion. We've more than doubled. Ethereum, 10 times its price. Ripple, even more significant, All of these names have gone 1,000%. I won't say all of them. Most of these names have gone 1,000% in 6 months. These are huge gains to the upside. And anyone investing $10,000 back in Bitcoin in 2010, it's now worth something like 200 million or something absurd. So these kinds of numbers are capturing everybody's attention. And obviously everybody in the financial world that trades stocks are certainly interested in something like this that has so much value. So Ethereum is what I'm most interested in. As you can see, it has in the past 6 months ballooned about a 900% increase in 6 months. Big gains to be had there, but it's really the future that obviously that we're most interested in, and how is it going to continue progressing from here? What's it going to look like? So the benefit of Ethereum and blockchain, again, just to summarize, it's decentralized applications. It's on a global network spread across hundreds of thousands of computers. It reduces transaction costs by removing the middleman. It removes points of failure because things are not stored in one centralized place where hackers could get to them. It prevents censorship because nobody is controlling this information, and it leads to transparency and trust. So let's look at some examples here for Ethereum. And blockchain is to the internet what Bitcoin is to email. So if blockchain were the internet, Bitcoin is one specific application for using that internet. And Ethereum is a network that really what they're trying to do is open everything up. They're making it very easy for developers and programmers to come in here and to utilize Ethereum to build. And it's really opening things up for the creative. And it's saying, okay, developers, let's see what you can do with this system here. And let's see the application that you can build and what these decentralized applications can do to shake up the industry. So Ethereum blockchain focuses on running the programming code of any decentralized application, and they call that DApp for short, DAP. ETH, the currency of it, the value, it fuels the network and it pays for the transaction fees and services. So obviously there are some transaction fees or services. They are very, very small compared to the centralized systems we currently have. And just to go over some examples of how Ethereum could be used in the future and how creativity of developers could expand here. One example would be the creation of currencies. So you can create all kinds of currencies on Ethereum, the network. I could create my own currency. Let's say I'm an artist and I want to start an album and I put myself out there, I make my own cryptocurrency and someone sees my stuff and likes it and they want to support me. They buy my cryptocurrency. I get the funds. They support me. And then that has value. That cryptocurrency has value. How much value that has, that remains to be seen. You know, maybe it won't be worth much, but if they were looking to make a donation, they get something in return from that. And to compare this to Facebook, you go on Facebook and you click the like button on a video and 100 million other people do that as well. You don't get anything, right? You click like, your part is done. You like the video and you go on your merry way. Facebook benefits from that. They make financial gains from that like. They get the likes, more people see it, and then advertisers pay money to Facebook to be on that page that everybody's looking at. So you press the like and you're making money for Facebook through advertisers. This is a new revenue model here, and it's something that is really unknown, and it's going to be very interesting to watch it play out. So essentially, you, instead of clicking the like button and giving the money to Facebook, you are clicking the buy currency button, buying the currency from the artist. And then, you know, if that artist gets more and more popular and more people are buying this currency and there's a limited supply of it, then that is going to accrue the value of the currency. And essentially, it's almost an investment, so to speak, whereas you click the like button on Facebook and that's the end of the transaction. You don't see any of that money. So it's a brand new revenue model and very excited to see how that ends up playing out. I've talked about removing the middleman and fees. So every single system, well, I won't say every single, but the vast majority of companies and systems that we currently use have a middleman, and that's eBay, Kickstarter, Airbnb, Uber, everything that you can name, the bank, you know, trading stocks, they all have a middleman and they all have access to your information. And that's a risk. I'm trusting Fidelity. I'm trusting Bank of America to keep my records safe, to keep my social security number, the amount of my money. I'm expecting them to give it back to me. This involves a whole lot of trust in a third entity, and that is removed from a decentralized network. I stay in complete control of my information and my funds without having to trust them to a third party or to a company to interact. So the exciting thing about Ethereum is the unknown. What can these developers create? And again, the platform is designed to make it open to any developer, giving them the coding to run wild here. You know, it took years for social networks to appear on the web. And when the internet was created, nobody could have ever imagined that this is where it would take us where we currently stand. So the unknown of what developers can create on Ethereum is really unknown, obviously, and it's exciting to really visualize what it could end up turning into. But in the end, we're pretty much the most impactful on the world applications, decentralized applications that could be created. We really can't even fathom what they're going to be at this point because this technology and this business model and all of this is so new. So getting back to the slide here, there's also an expansion of capabilities with Ethereum on smart contracts. And what smart contracts are, it's a contract that self-executes. So it handles the enforcement, management, performance, and payment. And what that looks like is where you have Bitcoin right now, it's a cryptocurrency, and I have to select that I want to transfer it to this account. And I select that, and then it transfers away. What this smart contract can do is it creates a set of rules, so to speak. Whereas an example would be if X account has Y balance, and if today is May 15th, 2017, then transfer 5 to XX account. And if not, don't do anything. So it's almost a set of rules that is automatically followed, and it can be, again, there's so many applications to use that for. It could be the outcome of a sporting event. I could say if X team wins and today is blah, blah date, then transfer 5 to ZZ account, and if not, don't do anything. So it's a self-management system, and again, it eliminates the middleman. I don't need a bookie to place the transaction between the winner and the loser of a sports bet, let's say. And these smart contracts, again, it's going to allow these developers to run wild. How can we build these smart contracts into decentralized applications, and how can they improve upon speed, transaction fees, and really the world that we live in? So it has potential to disrupt hundreds of industries, and the industries that are going to survive and thrive on this, in my opinion, they're going to be the ones that openly embrace blockchain. And if there's industries like stock clearinghouses that try and fight this because it essentially is going to drastically reduce their fees that they're raking in hundreds of millions of dollars, then in my opinion, they are going to be left in the dust. So the uses in the financial sector is where I'm really interested in this. And as I explained, the transaction settlement is instantaneous. It's peer-to-peer. I do not need Fidelity. I do not need a clearinghouse. I do not need a stock broker. So there's no more 3 days of settlement. It is instantaneous, and the fees are right there when they're supposed to be. So there's stock exchanges around the world using blockchain prototypes right now as we speak. The Australian Securities Exchange, Frankfurt Stock Exchange, Japan Exchange Group, even some portions of the NASDAQ, the LINQ here, which is a pre-IPO startup trading, they are implementing some blockchain prototypes, getting ready for the future. There are banks that are actively investing in blockchain research. And there was an Ethereum alliance created, Microsoft, Intel, JPM, startups. And to be honest, this is where I became interested in Ethereum. I read an article about this Ethereum alliance, and I saw that the big banks were getting interested. And really, in my opinion, the biggest disruptor and the biggest reason that these cryptocurrencies and that Ethereum would fail is if the powers that are currently in place did everything they could to squash it. And, you know, don't want to be too much of a conspiracy theorist here, but let's say the oil industry was continuously squashing technology that would free us from the dependency on oil. If that were playing out in reality, that would be a similar scenario that I would expect this progression into the future being stifled. But if I see that these big banks are getting behind it in things called the Ethereum Alliance, I'm a lot more interested. So what the Ethereum Alliance does is they learn from and build upon the only smart contract supporting blockchain currently running in real-world production, and to define enterprise-grade software capable of handling the most complex, highly demanding applications at the speed of business. So that's right from the Ethereum Alliance website. Sounds, a little complex, but essentially they're looking into how this can benefit them in the future and how it can shift the speed of business going forward. So now the most important question that a lot of people are interested in this video: how do I get a piece of this? Obviously, risk management is huge here. In my opinion, you want to be financially experienced or to be experimenting and playing around with this cryptocurrency space. It's very speculative. There is high risk. With high risk becomes huge reward. So when I first put my first money into Ethereum, I instantly said, okay, I can lose half this money and fully expect to lose half this money and still be okay. So that is how I determined how much money I was going to be putting in. So just want to get that out of the way. There is very high risk here. It is an investment into the future, or you can actively trade it, one or the other. If you are actively trading, you definitely want to be familiar with technical analysis. Otherwise, you're just guessing. And we can certainly help with that with courses and educational videos and free content and all that. But in terms of the amount of money that you're going to be putting in here, you have to understand of how high risk this is. So the way to do it is through how I did it, is through Coinbase.com. You then transfer money from your bank to Coinbase. You then transfer from Coinbase to GDAX.com, and they're the same company. And GDAX.com is a more professional way to trade these cryptocurrencies. If you can trade through Coinbase, but it's more mom and pop, and I had a learning curve where I made my first trade in Ethereum, and I made some nice profit, and I wanted to sell and cash that in. So I sold, and rather than the money going back to Coinbase, it went straight to my bank account. And then it took days to get from my bank account back to Coinbase to be able to trade with it again. And I missed out on an opportunity because of that. But it really highlighted how archaic the current system is. I can go from Coinbase to GDAX and to all these different applications fairly instantaneously. But if I want to involve my bank, it suddenly takes 2 to 3 business days, and weekends don't count. And that's just silly in the world that we live in. So Coinbase.com and GDAX.com are the sites that I use. Canadians have a little bit more difficulty here. And there's other websites, Quadriga, Quadriga, and Kraken are some other ways that Canadians have access to this. There are examples where Canadians have tried to trade with USD and they can't do it, so they have to buy Bitcoin to buy Ethereum. And to be honest, it seems like a bit of a headache for Canadians. I haven't looked too in-depth into the process because I'm American and it was nice and easy for me to get this set up. But just know that if you are Canadian, there's going to be a few more hoops and hurdles that you're going to have to go through to be able to trade and invest in this. So you are able to use a debit or credit card, a bank transfer, or a bank wire, and the bank wire is going to be your fastest way to get your money from your bank to Coinbase.com and then be able to utilize it. Another thing about Ethereum is there's ENS auctions going on right now. And these ENS auctions are essentially names. So right now, I have an Ethereum account, and if I want someone to send me money, or if I want to send money back and forth, it's a whole long list of letters and numbers that really doesn't make any sense, and I would never be able to memorize. I have to copy paste it. These names are auctions. They're not domain names. It's the most comparable thing, but they're not domains. And so essentially I could buy, chartingmandan.eth, and then from there on out, if I ever want to transfer funds or get funds transferred to me, so there's people snatching up all of these names in anticipation that it is going to be similar to a domain boom. But there's some key differences where, number one, you don't own these names. You buy a 1-year contract. So I'm currently bidding on some of these just to see, because there's no risk. So what happens at the end of the 1-year contract is you get your Ethereum back. So essentially you're locking up your Ethereum for a year where you can't use it, but you do get it back at the end when the contract expires. And if I were to bid, let's say I'm bidding on a name, and these bids are getting up there. Weather.eth had a significant bid on it, and there's other bids coming in for like $600,000. So people are seeing the potential here, and there's names to bid on. I think sportsbet.eth was one that I bid on. I didn't win it. Someone was willing to bid a lot more than me. But just applications that could be used in the future, because that worst case scenario, you're spending a small transaction fee that ends up being a couple dollars, but you are really, the only risk is just locking up this ETH for a year. And who knows, maybe there'll be a secondary market for these names where it will become more widespread, Ethereum, and then people will start to want to purchase these. 78% of the names currently being sold are being sold for the bare minimum. And that's, I think it's 0.015 ETH, which works out to like under $10. So these names are going for extremely cheap, and it's the risk to reward of getting some of these names is very, very low, as long as you're aware that you have to give up a year of that contract. And it's a bit more complex into that. I could honestly make a video individually as to how to do these auctions, because you have to reveal your bid in a certain time frame. It's a little bit complex. You need MetaMask as a Chrome extension to access the website to look at the names, and that's plugging into the Ethereum network. So I'll probably save that for another video if people are interested in the future. So what we've got from here on out is the market psychology. So that's why technical analysis works. That's why trading using charts is beneficial in my opinion. It's because of the market psychology and human emotion. These are humans trading and buying and selling. And if we map that out pictorially on charts, we can gain information and utilize that for our trading. So with the market psychology of cryptocurrency, what I believe is going on is obviously there's a huge influx of money going on right now. It's making headlines, it's seeing huge gains, and it's capturing a lot of attention. And we're in a bit of a euphoria state right now where everybody wants a piece, and we're not impervious to big pullbacks. There could be a bubble in the cryptocurrency space. I'm not ruling that out. If more people come in, it's going to reach a point where the gains are so huge to the upside that once people start selling, it gets magnified and we see a big time drop in a short amount of time. That's entirely possible. We need to be able to protect ourselves against that by knowing technical analysis and knowing key levels on when to get out if support breaks. But in terms of the short term, for fundamentals, there's pros and cons here for the short term. And the catalysts are there's a consensus meeting here at the end of May that is really, it's blockchain's going to be on full display, Ethereum's going to be on full display, Bitcoin. It's really the main event for the cryptocurrency and blockchain space. So there could be some announcements that come out there. I'm sure there's going to be some announcements saved up to build some of that hype up and make some headlines. And one of the things that I'm most interested in is the first cryptocurrency ETF. And what an ETF is it is going to allow people that have brokerages in their Fidelity account, their E-Trade account, all of these accounts are going to be able to get a piece of this cryptocurrency. The most common question I get right now is, I can't find this ticker on Fidelity. How can I buy? And so then I have to refer people to Coinbase.com. And what that is that's a barrier to entry. People aren't familiar with Coinbase. They don't want to put their money to a site that they don't know about. And really that highlights how our centralized way of doing things. You know, we trust Fidelity with all of our money and information. We trust all these banks. And after 2008, not sure why we still do that, but we still do. And that's what this decentralized method is going to try and erase. We're going to not be as dependent on these big companies. So, but what this ETF is going to do is going to open the door to stock traders and investors through their brokerage account to be able to get a piece of this. And what an ETF is it's going to allow people to buy shares of an ETF. And the more people that pour money into this ETF, the ETF then has to go and buy the asset. So if I'm investing in an Ethereum ETF, we are going to have to see whoever is controlling the ETF buy Ethereum as the asset that is being held by this ETF. So essentially, I foresee tens of hundreds of millions of dollars pouring into the first cryptocurrency that gets an ETF. Bitcoin was just denied getting an ETF due to, a lot of people think it's because it's more of a currency and not as much of an asset. And people are more hopeful for Ethereum because it is more of an asset and less of a currency because of the network and development that can be done on it. It's not just a one-way street, so to speak, of transferring a cryptocurrency back and forth. So there's that potential. Bitcoin, the ETF decision is getting reviewed right now. So there's a little bit of hope there, but eventually there's going to be a cryptocurrency ETF, in my opinion, and it's going to see a huge influx in money. When it's first announced, there's going to be a huge influx of everybody wanting to get in before the ETF goes live. And then once the ETF goes live, there's going to be a big influx of everybody in the stock world wanting to get a piece of this. And you better believe that these $100 million stock traders, they are licking their lips wanting to get a piece of the gains being seen in the cryptocurrency space. And that is when it will start to go more mainstream in terms of cryptocurrency and Ethereum, and whatever cryptocurrency is chosen, it might not be Ethereum, whichever one is chosen is going to go more mainstream very quickly. Some cons could be coding failures, which are more human error related. And also, as I mentioned, the powers that be, if they want to squash this technology, it doesn't look like that's going to be the case, but that would be a risk as well to try and quell the future growth and the shift in the way things are going here. And people refer to Ethereum as the new internet, and it's possible. I mean, that would obviously be best case scenario for anybody getting into Ethereum. As far as the market trend is currently concerned with technical analysis, because of all the hype, every pullback that we see, we have people wanting to get in. So everybody's looking for the next Bitcoin. Some people feel like they missed out on Bitcoin. It's now $1,900 a coin. It used to be back at $50 a coin. So they say, oh man, I missed Bitcoin. I should have invested. What's next? And all these other alt currencies are gaining power, they're gaining value, and they're gaining headlines. So everybody's looking for the next Bitcoin. They want to get in here. We are very far from general acceptance. So with the stock group that we run here, got hundreds of members, and the amount of people that are familiar with cryptocurrencies and trading them, I would put it at about 2%. So maybe 2-3%. And obviously the more we cover it, the more people are getting into it. And that's what it's going to take. It's slow adoption, but we are very, very far from general acceptance in the world as to cryptocurrencies and this ETH potential for the future. So my ETH future targets are hundreds of dollars. I'm looking, I'm not looking to shoot the moon. I'm not looking to be a millionaire overnight here. I'm looking to see Ethereum accrue in value over the next few years and see a few $100s. And to reach the current Bitcoin market cap, Ethereum would be over 450. Keeping in mind that Ethereum is going to continually be created, and we're actually looking into mining some Ethereum ourselves, but so that gets factored into the market cap as well. But if everything were all else equal right now, for Ethereum to be Bitcoin's market cap, we would be over $400. So obviously big gains to the upside. That would be a 400% move, over a 400% move from where we currently stand. So I'm very excited about the future potential of Ethereum, as well as cryptocurrencies, as well as the ever-shifting technology of the 5.5 hour. It really has. So here I'm just going to try and show some examples of how I have been utilizing technical analysis to trade ETH. And what I want to show first off here is a key support of $87. And I was watching this $87 support, and I knew it was a must-hold level, and we bounced off of it time and time again. And let's get this line exactly on that $87 level. It's a psychological support level. It's a nice round number. And these psychological levels are coming into play again because it's human psychology that are trading these names. And nice round numbers are nice targets or that humans like to buy and sell at. So here we had $87 as support. We saw the bulls try and hold this level. We saw a lower high being set. And look what happened as soon as we lost $87. We set a lower low. And as soon as $87 broke, within a half an hour, we dropped down to $82.20. So that shows you the volatility. We dropped about 6% in 30 minutes. That's a huge dump. But with these huge dumps gives us huge opportunity. The RSI is an indicator that tells us when things are oversold. So whenever I see the short-term RSI drop down below 30 on these cryptocurrencies, because we are in such a bull market for these cryptocurrencies currently, we are seeing people buy up any dip opportunity. So what we had occur here was this dump to 82. 15 minutes later, the price was up to 87.11 again. And 87, previous support, now acting as resistance, rejected the price. But just like that, we dropped 6% in 30 minutes, and we bounced 6% in 15 minutes. So there are huge gains to be had here in the short term, just day trading and flipping ETH here. And in terms of technical analysis, again, I put out these videos. I believe I'm putting out like 5 videos a week these days in terms of covering some of these cryptocurrencies and technical analysis. So feel free to follow the YouTube channel, and I will continue putting those out. I also did a live webinar just the other night where I did live Q&A answering and pointing things out on these charts. And I'm going to continue doing that in this crypto space because I'm so interested in it and actively trading it and having a lot of fun. The only thing you got to be careful of is this trades 24/7 and you might result in a lack of sleep. So I'm personally very excited about cryptocurrencies and Ethereum. I'm going to continue charting and trading and putting out videos. I appreciate you watching this video. By all means, leave comments, posting additional information, asking questions, helping each other. That's what I love about this space the most, of teaching stocks and running chat groups and everything, is everybody's helping each other. And it's not a me versus you mentality. We can all make money together. It's a team game, and I love that. People sharing information and interacting with each other. So by all means, do that, and I'll continue to put out videos in the future. I appreciate you watching, and I hope you have a great day or night or whatever.